Have you ever been there? Staring at a setup, it looks perfect. I mean, everything's aligned on the chart. But then there's that little voice, or maybe just a feeling, right? Deep down, it's saying, hold on a sec, something feels off. Maybe you listened, backed off, and dodged a bad trade. Or maybe you ignored it, pushed through, and, well, regretted it pretty fast. You know that feeling. Okay, let's unpack this today. Because what you're feeling is actually way deeper than just, intuition. We're diving into a two-parter today. First up, we're peeling back the layers on something pros call the Engram trading edge. It's basically how top traders weaponize their own nervous system for success. It sounds intense, but it's fascinating. Then we'll switch gears. We're going tactical with a real-time market overview. We'll look at liquidity, what the market's afraid of right now, and where the big moves might be coming from in equities, Bitcoin, gold, and Forex. Especially as we head into Q4 of, wow, what feels like the fastest year ever.
Yeah, and what's really cool here, what our sources bring together, is this blend of like cutting-edge brain science and actual usable market intel, all set against the backdrop of right now, August 2025. So you get this unique view of how the best traders manage their internal state and what's driving the external markets.
Exactly. And our mission for you listening is simple. Cut through all that noise out there. We want to give you those key insights, those aha moments, like a shortcut to understanding these pretty complex things so you walk away feeling genuinely informed, maybe even seeing your own decision-making a bit differently. All right, let's dig into this Enneagram edge, that gut feeling science. So back to that scenario. You Aries D, perfect setup on the screen, but your heart rate creeps up, stomach tightens. What is that? Just nerves.
Well, it's usually more than just standard nerves, that signal. It's very likely an engram firing off. And an engram, it's not just some fuzzy intuition. It's specific. It's a stored emotional cluster, like a memory trace linked to a feeling. See, your brain doesn't record things like a tape recorder, all linear. It pulls data from everywhere in your body, tiny shifts in mood, reflexes, stuff happening inside and out that your conscious brain usually just filters away. It's your nervous system basically saying, hey, I remember something like this, even if you consciously don't recall the exact trade.
Huh. So in that Euro example, even if my logic says trade, my body might be flashing back to the feeling a similar trade that went wrong without me even realizing it. How does that physical memory actually work? What parts of the brain are lighting up here?
That's the key question. Think of engrams as memory bundles. The emotion, the physical sensations you felt, what happened next, the consequence. So your hippocampus logs the facts, what happened. The amygdala tags it with the emotion, fear, excitement, whatever. Then the insula clocks the physical stuff, sweaty palms, tight chest, and crucially, the nucleus accumbens, the NAC, makes the final call, win or loss. This creates this really deep embodied memory. And the real drama in trading often plays out between the NAC's urge to jump in and the insula's quiet, maybe wait signal.
Okay, this is where it gets really juicy, isn't it? This internal tug of war. The nucleus accumbens versus the anterior insula. Sounds like the core conflict for traders.
It absolutely is. The NAC, you can think of it as your impulsive cave brain. It's all about drive, ambition, that immediate push for reward. Dopamine floods in. Now, that drive is great for, say, hitting the gym or finishing a project. But for trading, the sources literally call it terrible, hugely detrimental, because the NAC is always screaming, do something now. And it equates losing money with losing status, which triggers fear. It's behind a lot of impulsive, fear-driven mistakes. Then you've got the anterior insula. That's your diamond compass. It's way more subtle. It detects those internal shifts, tension, ease, a feeling of contraction before you even consciously process it. It's the part whispering, hang on, something's not quite right here, or maybe, I've seen this pattern, the likely outcome is X. It's tapping into deep pattern recognition.
So the setup looks amazing, NAC's yelling go, dopamine's flowing, but the insula's like, wait a minute, that's the conflict right there, this millisecond battle you mentioned. How does a trader actually tell the difference in real time between the NAC's excitement and the insula's warning?
That's the million-dollar question, right?
Yeah.
And it happens incredibly fast. An enneagram gets triggered by something on the chart. Your body reacts, maybe your chest feels heavy, jaw tightens, the insula picks that up. But then, boom, the enneagram ejects dopamine, saying, yeah, this feels good, this is it. And here's the trap. When traders say, I'm feeling it, often it's just the NAC's dopamine talking, urging action. Not true insula-based intuition. This leads to maybe rationalizing the trade, then acting or holding back, and then a new enneagram gets formed based on the result, especially if a bad decision leads to self-blame. The trick is to pause, just for a beat, let that NAC noise die down so you can hear the insula.
And that Trader Finnick example nails it. He did all the work, had a solid dashboard idea, reasons all lined up, but when the moment came, His gut just said no. He literally said, my gut feel says it is a no, and backed off. He listened to his body telling him the momentum wasn't there. Avoided a loss. That's mastery, isn't it? Telling the difference between real insight and just fear or greed. Avoiding the loss being key. Okay, it's clearly powerful. But developing this awareness, it's not magic, right? How do traders actually build this skill?
No, definitely not magic. It takes dedicated practice, sometimes in ways that feel counterintuitive. Which brings us to how you build it. There was this really interesting experiment back in 2016 with about 60 traders. Instead of a how-to guide, they got a what not to do playbook, like 5 or 6 pages listing conditions where they absolutely should not trade. It forced them to stop and check themselves before every single trade. Am I breaking any rules here? Instant self-awareness check.
And the results were pretty stunning, weren't they? 7 traders saw big jumps in their P&L. One guy went from basically zero to making, $80,000 in just 12 weeks? That just hammers home the point. Awareness is built, it's earned, it's not a gift. But, quick question, could focusing too much on gut feel lead you astray if you haven't trained it properly? Like mistaking anxiety for intuition?
Excellent point. That's exactly why the training is critical. An untrained gut feel often is just the NAC being noisy. To refine it, the absolute cornerstone is emotional replay journaling. And this is crucial. It has to be done immediately after a trade, not hours later, not the next day. Because your brain is incredibly good at rationalizing things after the fact to protect your ego. You need to capture what were the conditions, what exactly were you feeling physically, emotionally during the trade, and what happened. Journaling right away brings those engrams to the surface before your brain smooths over the messy truth.
Like that altcoin trader case study. Missed the entry, got FOMO fear of missing out, classic NAC, jumped in late, then got stopped out by that overnight drift of death, only to watch the trade work out later just as planned. Journaling helped him see that specific, repeating pattern of fear driving bad timing.
Exactly. And beyond journaling, a few other practices really help. Developing a somatic vocabulary, actually naming the sensations. Is it a heavy chest, light belly, tight jaw? Getting specific helps differentiate. Then there's the 60-second pause. When you feel that urge, that rush, just wait 60 seconds. It gives the emotional peak time to pass, weakening the NAC's grip. Also, rehearsing highs and lows, visualizing setups, talking through them, and building emotional equity small win. Trading when you feel aligned, reinforcing positive patterns. It's all about consciously shaping those internal signals.
So the big idea is, the best traders aren't just chart masters, they're masters of their own internal state. They trade their bodily sensations as much as the price action. That phrase, wealth truly begins in the nervous system.
Yeah.
It really lands differently now. It's like your body becomes your most reliable indicator if you listen.
Precisely. And this isn't just theory. Look at that big study of 110 institutional traders in London. The top earners, the ones pulling in $80–90 million a year. They weren't suppressing emotions, no. They were actively monitoring and reappraising them, using feelings as data, which is the total opposite of what 99% of people try to do, just stuff emotions down. And that's where they go wrong. They cut themselves off from vital intelligence.
And it's not even new. Back in the 90s, the big banks who were huge players back then, maybe even bigger than hedge funds now, were bringing in experts like Denise Shull, teaching traders about these very concepts, engrams, emotional cues. And guess what? Those traders significantly outperformed. It proves this internal work pays off.
Okay, so we've really explored this powerful internal compass. But how does having this finely tuned system help navigate the messy, sometimes crazy external world of the markets? Let's pivot now to the tactical view. August 20th, 2025. What's the main story playing out in the markets right now?
The main story is, it's choppy. Significant chop, actually. And the reason is pretty straightforward. A lot of the big institutional players are still out on holiday. They mostly won't be back in full force until the last week of August, so the market's kind of waiting, observing. You might get some quick day trades, but honestly expect some potentially massive moves, both fake outs and real directional shifts once everyone's back at their desks. And the underlying reason for this chop, this uncertainty, our sources point to liquidity being pulled out by the TGA, the Treasury General Account. That's a big deal, right?
Huge deal. It's draining liquidity, which shrinks margin accounts at brokerages and just generally makes people less willing to take on risk. That's the defining factor right now. So let's see how this plays out across assets. Start with equities, the S&P 500. We've definitely seen it pull back from the July highs. 2 main reasons. 1, yes, the TGA liquidity drain you mentioned, less money, less risk appetite. 2, that rally we saw in late July, it was technically inefficient.
Yeah.
And now that inefficiency is acting like a vacuum, a liquidity magnet, pulling prices back down into that zone. Plus, don't expect any big liquidity boost for the rest of August, so pressure could stick around.
Okay, so caution short term is the word. But it's good to hear the long-term bullish view for equities hasn't really changed. This sounds more like market plumbing issues than a fundamental breakdown.
Exactly right. Underlying trend. Still bullish. But navigating this messy patch, that's where having that internal edge, knowing when not to trade, becomes so valuable. Now, shifting to yields and Forex. Keep your eyes glued to the U.S. 10-year and 2-year yields. They're driving the bus here. The 10-year probably peaked around 4.5%. It's about 4.38% now. We expect it to head south later this year as rate cuts hopefully start. That's going to weigh heavily on USD JPY, push it down. Meanwhile, the 2-year yield, that's the key one, for the dollar's immediate strength, it's holding above 3.65%. As long as it stays there, it's putting a lid on EURUSD, getting much above, say, 1.17 or 1.18. Euros around 1.1636 now. It's a real balancing act based on rate expectations.
So yields are the puppet masters for Forex right now.
Got it
And
all.
catalysts, things that could shake this up. We've got Jackson Hole this week. Always potential for fireworks there, right?
Yeah.
Known for mega reversals.
Cool.
And then looking ahead, September NFP the jobs report. That'll be huge for gauging the Fed's next move.
Absolutely. Okay, moving to gold, XAUSD. The outlook here is pretty clear, structurally bullish. In this kind of stagflationary environment, we're seeing growth slowing, inflation sticking around. Gold is just, well, it's the superior trade. For anyone looking at tactical entries or adjustments, you're watching for a solid break above 3,340 to confirm strength, or potentially a dip back to the cycle low around 3,294 as a buying zone.
Makes sense. Gold loves stagflation. And finally, Bitcoin, BTC. Currently hovering around 113,089. What's the tactical plan there?
With Bitcoin, we're actually looking for a move down. We anticipate a drop towards maybe even a bit below that 111,000 level. It seems to be part of its current 6-week cycle pattern before we'd expect things to turn bullish again. So the plan is simple. Wait, we'll likely increase engagement once or if it dips under 111K. Patience is key here.
Wow, okay, what a journey today. From the depths of our own nervous system with the Engram edge to the hard realities of market liquidity and asset levels. Two critical sides of the same coin.
That's exactly it. You can't succeed long-term by just focusing on one. You need that deep psychological awareness winning the NAC versus ENSLA fight, and you need sharp, clear-eyed macro analysis. Relying only on charts without understanding your internal state, or only on gut feel without understanding market structure. Both leave you exposed. It's the synergy, the integration, that creates a real sustainable edge.
And that's what we aim for here, helping you, the learner, connect those dots, become truly well-informed, not just reciting facts, but understanding the why behind them. So as you think about this deep dive, here's a final thought. How might developing your own somatic vocabulary, really learning to listen to your body, tell intuition from impulse, how might that apply beyond trading? What other big decisions in your life could benefit from pausing and truly listening to that diamond compass? If you found this valuable, share it with someone else who appreciates getting up to speed quickly but also deeply. We'll be back next time for another deep dive into what's moving the needle.